Hello, and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am back to deliver your real estate news for the week. I'll go ahead and jump into the slides because we have some really interesting stuff to get into today. All right, so today is June 24th, 2022, and let's find out what happened this week. I do have my summer buyer and seller guides available. So just another reminder about that. If you are thinking about buying or selling this year, I'd really recommend you reach out and grab one of these. It's so much really great, relevant information to today's market. So let me know if you want one of these and I will send it over your way. And what happened this week? I have been hearing for a few weeks now from other real estate agents and seeing it on the numbers online, which we'll get to in a little bit. There's way more listings coming to the market. This is something that is like headline news. So the interest rates, as we know, have been going up at an extreme rate, but we have more inventory coming to the market. So there's definitely an interesting situation for buyers. There's a lot of opportunity, but there's also a lot of struggle. With the higher interest rates, people are qualifying for less house, are able to put less money towards their future home. And we are seeing prices soften just a little bit, especially the offers over list price that are, 30 offers on a property and $250,000 over list price, or even more up in the higher price points. It's been a really interesting market for a really long time. It's been a struggle for buyers to get an offer accepted, and they're having to pay so much more above list price. Now we're seeing a lot more price reductions. I talked to a couple agents calling on comparable properties for a listing that I have coming up in the future. They said, yeah, we're pending at $5,000 less. So we're not seeing this stuff in the solds yet. This information is still in the pending properties because it's really just hitting us. So we're not seeing any of this in the sold stats yet. We have to watch the pendings. But my email, I get copied on listing findings that get sent to my clients or alerts to go and look at a listing and see if I should send it to them. And oh my goodness, there have been so many more emails coming at me. It's been hard to keep my inbox at a reasonable level because there's just so many more listings coming to the market, and I got to look through a lot of them to see if they're going to be a good fit for my clients. But we have been so short on inventory for so long, and now we are seeing it come to the market. Buyers, you have options now. So even though rates are a little bit higher or a lot higher, we'll get to that in the show a little bit later and exactly what's happening there. There's a lot more to choose from, and you're probably not going to have to bid significantly over list price like you would have in January or February. So I'll go ahead and jump back on into these slides because, as I said, there's a lot to get to. Just a side note, all of the articles today are based on national numbers. There's just so much going on with interest rates, which affects things on a national level, that I kind of dug into this today. So we will go over our local stats, of course, but as far as the articles, I felt like this was much more important than anything that local real estate articles that I found. So home sales give way as prices enter unprecedented territory. Sales of previously unoccupied U.S. homes slowed for the fourth consecutive month as climbing mortgage rates and record high prices discouraged house hunters. So we are seeing fewer sales, fewer people buying homes because there's a lot of uncertainty with the interest rates, and a lot of people got pushed out of the market or just don't want to pay what they would be required to pay. We have seen a fall of home sales over the past 4 months. Nationally, compared to a year ago, home sales median price jumped to $407,600. And this is on a national level. We know we're in an expensive market. We know that. So looking at this $407,000 house, you're like, wow, that seems like a great price. But nationwide, this is crazy. It has gone up so much in such a short period of time. So we're at an all-time high, nearing 408,000. Interest rates, as we talked about, are rising. This is last week's stat, so we'll get to this week's stat. There were some real estate trends favored buyers last month. So this is looking back at the stats from May. Month supply on a national level is now at 2.6 months supply. So in April, we were at 2.2 and 2.5 a year ago. In our area, it is significantly less than that. The higher mortgage rates are straining affordability. Despite that, homes are not staying on the market very long. Homes sold in just 16 days on a national average. Locally, it is less. So this one came out on the 23rd. The Fed's inflation fight has hit the housing market. Here's what buyers need to know. Last week, the Fed met and raised the rates significantly last Wednesday. This has created a lot of panic and anxiety in a lot of people. So we know that the Fed raised the rates. There's a good chance that this will cause a recession in the end if the Fed keeps raising rates. They're trying to balance the inflation and not cause a recession, but this is a tightrope that they have to walk. I have my doubts that they'll be able to avoid a recession completely. So it just depends on how bad it is. So what this means for home prices. Housing economists don't expect sharp drops in prices, at least not nationally. So there may be certain areas where prices were inflated over what the area incomes really suggest it should be. So we may see home depreciation in certain areas, but on a national level, this is not what we're expecting to see. National Association of Realtors said Tuesday that rising mortgage rates have slowed home sales. Even so, the median price of homes sold nationally hit a record $407,600 in May, 14.8% from a year ago. And the inventory of homes for sale remains below the levels of 1 year ago. Powell says that buyers need a reset. The sharp rise in home prices over the past 2 years has made affordability a major challenge, particularly for first-time home buyers. Unlike repeat buyers, first-time buyers haven't built an equity cushion as prices have soared. This has been the struggle for first-time home buyers for the past couple of years. They can't compete with people who already own homes because they have so much equity. They're able to make much stronger offers. This whole situation, the hopes is that it will make it easier for first-time home buyers to purchase homes in the future. He says we need to get back to a place where supply and demand are back together, where inflation is down low again, and the mortgage rates are low again. This is something that we can expect to see in the distant future. And just how fast we can make it happen will determine that. What can you do? Here are some of the options that this article recommended. How home buyers can cope with the still challenging market. Shop around for a mortgage. Consider a fixer-upper. Look at a low down payment loan and move to an affordable area. Consider a fixer-upper. That's personally what I did last year when we purchased our first home in the middle of this crazy housing boom, where it was super competitive. We had a lot of luck on our side in that situation. But if we'd been going after a really ready to go home, there's a really good chance we would have had a lot tougher time locking that down because there would have been a lot more demand. What we did was wrap a good portion of our renovation costs into the loan. So this is called a 203K renovation loan. And you can go into a property, guarantee the seller that they don't have to do any work, because your contractors, that you bring in contractors to get bids, choose a contractor, and they contract through your loan to finish the work within a certain time period. So this was a great option for us. We wouldn't have had a house that was nearly as nice as the one we ended up with if we hadn't gone that route. As far as shop around for a mortgage and look for a low down payment loan, there are some really creative loan options out there for you that are becoming available on the market because of these challenging times. Some of these aren't new, but they're having a resurgence because of the situation. So we've basically seen fixed mortgages for a very long time. 30-year fixed is what we report on our weekly mortgage rate. But we are seeing a lot more ARMs coming into play. So that's an adjustable rate mortgage. And there's a 5-year ARM, 7-year ARM. Those are the most common ones. For a 5-year ARM, you would lock in a lower rate for 5 years. And then after that, your rate would adjust. However, there's a good chance that rates could go down in the future, which we'll dig into again in a minute. But if that happens, you can always refinance and get that lower rate in the future. So even if you're paying a higher rate to start out with, you'll be able to refinance and get that lower rate and take advantage of that option. There's also a 2-1 buy down. So you can buy down your rate for 2 years. For the first year, it'll be 2% lower. The next year, it'll be 1% lower. And if interest rates go down, you can refinance, and before that next period where your payments will jump up. So this is from Powell Fed, aims to avoid recession, but says it's possible. This meeting, there's been news briefs ever since, and Powell stressed that the primary goal is to reduce inflation, but he said he hopes to achieve a soft landing and not go into too deep of a recession. Everybody's kind of coming around that this is a lot more likely to happen in the next couple of years going into a recession. We are expecting rate hikes throughout the year, but we don't know how much because that's going to be on a meeting by meeting basis as stats come in. Powell said that higher borrowing costs for things like mortgages, auto loans, and credit cards resulting from the Fed's hikes can help slow consumer demand and inflation pressures. And anticipating those large rate hikes in the future that could happen, that they're suggesting will happen. So the treasury yields have gone sharply higher, and that means interest rates have gone up as well. And as of yet, we aren't seeing any signs that inflation is moderating in a meaningful way, but we kind of do expect to see that on the horizon. History proves recession does not equal a housing crisis. You can see in 4 of the last 6 recessions, home prices did actually increase during that time period. The first time it did not was 1991, and that was only minor decrease. And 2008, that was the housing crisis. This is very much not the same setup. I'm not going to get into that now, but if you think it is, please reach out. Let's have a conversation. It's nothing like it was in 2008. And throughout history, during a recessionary period, interest rates go up at the beginning of the recession. But in order to come out of a recession, interest rates are lowered to stimulate the economy moving forward. Historically, we have seen a repeated uptick in interest rates followed by lower interest rates. So here, highlighted in yellow are those past recessions and the rates at the times. Back in the 80s, we went from 16% to 11.5%. Throughout the recession, it popped up and then dropped. Here, it started high and dropped from 18 to 13%. 91, 11% to 8.75. So you can see we have seen historically during recessionary periods, interest rates do go down. This is the same thing. This just shows the duration here as well. So in 6 months, we went from 16% to 11.75. And most recently, for the COVID-19 recession, 2 months, February through April of 2020, we went from 3.75 to 2.75 in 2 months. So, I mean, these are big drops. So I do think we can expect in the next 2.5 years to see interest rates go down fairly significantly. And the estimated home price performance has been adjusted. This is an average of several experts that gave their forecast. So in 2022, they expect the overall price performance to increase 9.3% year over year, December to December. And after that, we see more of a normal home price appreciation. 3 to 4% or so is kind of the average, what we'd normally expect to see over years, kind of the lower end. But yeah, this 20% price increase is not sustainable. That's crazy. Here's our showing activity, and you can see it dropped down and kind of leveled out a little bit. That's for national. This is national as well. Showings have skyrocketed in the last 2 years. This just shows that graph in a different light. And you can see the seasonality each year of the spring getting more showings and then dropping down until December. So we're kind of following that same pattern here, only we're much more elevated than we were pre-pandemic. And that brings us to our market stat minute. So in King County, we had 1,187 new listings, 692 pendings, and 704 sold. So we did bump up in our new listings and down in pendings over the past week. This is active listings for the past year. In June, July, August, we had a fair number of new listings, and then we dropped down, had our usual winter slowdown, and then have increased. This goes up till May. They haven't come out with the June stats yet because we're still in it. But if we compare that to the active listings to the number of sales, the gap between these two bars, that it means that it is intense for buyers. They're struggling. There's a lot of competition out there over the homes that are on the market. The gap between those two bars decreasing throughout past year, and to the point now where we are closer than we've been in active listings compared to sales in a very long time. If we look at locally, Federal Way, Kent, and Renton all have more new listings than pendings. Auburn does have more pendings than new listings. So Auburn may have a little bit more competition on the market heading into this weekend for the number of buyers based on the number of homes that are available. But overall, we're seeing a lot more inventory come to the market and a lot more choices for buyers. Last week, we had our weekly average mortgage rate at 5.78, and that was the highest it had been since 2008 during the housing crisis. This week, we're at 5.81, so up slightly for our weekly average. But if we bring it to today, we're at 5.85. So pretty much the same. We did bump up. Rates have just been very volatile this week. Monday was really high, and then Tuesday came down. It's been bouncing all over, but as of today, we're up 0.1% to 8.5 from yesterday. And this is mortgage rates from the beginning of the year, and we can see the general trend overall. They're saying we're at 6 here. This came out a few days ago. This is the trajectory we've been on since the beginning of the year. These summer guides are available. Please let me know if you would like to have one. Be happy to send one over. It's not a problem at all, I promise. And there's just so much good information in there. If you have any questions, please feel free to reach out. I just want to end this by just saying, if you're even pondering buying a home in the near future, reach out, let's have a conversation, talk about what's happening with rates, the upcoming possible recession, different loan options, because there really are just so many different options out there for buyers right now. And if you're a seller, we're still in a seller's market. Yeah, we're not in January, February of this year, but that was insane. I felt like I really couldn't take any days off because there was a home that would come on the market and then go off the market in a single day. So it was, now we can take a little time, set things up, do it right, and have a little more breathing room. And prices are still way up over last year, even over January. They haven't come down very much. So it's just there's a lot more listings on the market, and competition has been a little more spread out. So if you have any questions, please reach out. I would love to have a conversation with you about the market in your area or an area you might be interested in moving to. So yeah, let's have that conversation. I will be back here next Friday, 3 p.m. with your local real estate news. And I hope you have a fantastic week. See you next week.